So recently we had some mixed numbers out of the US in terms of their jobs. As I mentioned on Friday, we're going to get Canadian jobs. US came out a bit mixed. We had the private payrolls number, the ADP number, come out. We have a chart on that. We can show it. And it shows negative 33,000 jobs, a huge surprise. We were expecting obviously a positive number out of the US, private payroll number, and it came in negative. And that set this tone or stage for the number that came out last Thursday. You can see here, last time ADP or private payrolls was negative, you got to go back a few years. That's a monthly number, keep in mind. So you got to go back to, I guess, first half of 2023, the last time we saw a negative number. So that set the stage. What were you going to get come Thursday when we got the non-farm payrolls number? That's the big number that we all look at to see what the US or how the US would fare. Let's show that chart. And we can see the United States produced in June 147,000 jobs, in line with the previous 3 months. The unemployment rate actually dropped to 4.1%. Unbelievable number. So on the private payroll side, we saw jobs shrinking or job loss, but on the main number, we saw an increase. So how do you account for that? Well, very simply, it's government. Government are creating most of the jobs, if not all the jobs right now. State and local governments in the United States are producing the jobs. And that's basically how you account for it. We're seeing, as I said, pretty much rock bottom unemployment rate, full employment in the US at 4.1%. It's no wonder that the Fed is not in a hurry to cut interest rates when he sees jobs growth like this. Obviously, he's also looking at GDP and inflation data to make their decision on interest rates. But definitely strong jobs growth out of the US overall, but mixed, because when you factor in the private number, you're not so sure how healthy the jobs are in the United States at this time.